The REB Business Empowerment Showcase, shining a spotlight on the most innovative businesses that are helping principals, agents and property managers get ahead in their marketplace.
Hello and welcome to a special crossover episode between the Smart Property Investment Show and a Real Estate Business Podcast. I'm your host, Emilie Lauer, journalist here at Momentum Media, and today we are going to dive deep into why and where investors have been selling their properties. Joining me today is the chair of the Property Investment Professional of Australia, PIPA, Lachlan Vidler, who's going to share with us the latest insight of the state of the investment landscape across the country based on the latest PIPA research. Lachlan, thank you so much for joining us today.
Oh, thank you for having me. It's nice to be back in the studio with a different hat on compared to normal.
Yes, and different host as well.
And different host as well. Yeah.
Our first podcast together. Look, I want to start by a big congratulations. You know, you've started your position as the chair of PIPA in July, so it's been about 3 months. How has that been going?
It's been great. I mean, I've been on the board now for almost 4 years. So PIPA as an organisation, I'm very used to, you know, working and being a part of PIPA. But obviously taking on the chairmanship is a very, very different part of the organisation. But it's been going really well. You know, we've had a massive sort of 3 months that I've been in charge. And then even the couple of months prior where we started that handover process, we've had some huge milestones. We've brought in our first general manager, Matt, who's doing a fantastic job. We've brought in a few other staff members. And then we've been doing really exciting things like, you know, the investor sentiment survey, planning for our national conference, which is on next month, October, here in Sydney at the Fullerton Hotel. So if you're listening and you don't have your tickets yet, make sure you go and get your tickets for that because it's going to be fantastic. I think Matt was telling me we're now up to something like 20 different speakers across the entire conference, and it's going to be absolutely incredible. So it's been a very, very it's been a shotgun start. We'll say that it's been a shotgun start.
Yeah, very busy for like 3 months already.
Yes.
Yeah. Look, it's been very busy for you as the chair of PIPA, but it's been a very busy years for investor. Yeah, 3 rate cuts, an increased demand, reduced stock. How have these factors impacted the market for investors this year?
That's a great question. And I think the impact on investors, I think we could actually take it even more broad and just say the impact on people buying property, people looking at property, being around property. It's been really, really interesting to see, right? Like as all the listeners would know, separately, I obviously run Atlas Property Group. So I get to be at the coalface of that. And then when I'm doing my duties in PIPA, I get to sort of take a step out of that business side and I get to look at it more from an industry side. And it's been really interesting to see because it actually impacts people or it impacts people far more than, you know, you might see it or believe it, right? Like first and foremost, investors, what happens to them? Well, you know, if you own property, it means your properties are probably going up, right? Because there's such a shortage of supply, right? And a demand that if not staying equal is probably increasing, right? You then go, well, what about if you're a homeowner and you're looking to sell? Well, now you're having fantastic results because the market's going up. If you're a real estate agent, you might be having record-setting sales. But the other side is stock is very hard to come by. So when you get stock, you might be selling it for great pricing, you know, really moving ahead. But you might not be doing as many deals as you have done in previous years because you just can't get access to the stock because people are holding on tight at the moment. And then that goes further, right? Mortgage brokers, prices are going up. So maybe they're writing loans that are bigger than they have been on average before. But again, maybe they're not actually transacting as much because it's harder to do. And we could take that further and further down for almost every job and industry. But I think at its core level, it's making things really, really difficult for a lot of people. And that's why it's so important that when we're looking at an industry level, whether it's government or private enterprise, we have to be doing everything that we possibly can to be trying to add more stock into the market, looking at where demand is coming from and what levels it sits at, and really just doing our best to not make life harder for ourselves than it already is.
Yeah, well, adding stock to the market is always something that, you know, it's very interesting, I think, because you would believe that to add stock, you need to build, yeah?
Yes.
Now, building new at the moment is very complicated. You know, like we've got a shortage of workers, tradies.
Massive as well.
Look, prices of material is going up. We've got a lot of, I don't want to say a lot of, because not everybody is the same, but some builders that are cutting corners and then you end up with having massive issues on new builds.
Yeah.
How do you add stock then efficiently?
I feel like this is the conundrum that everyone is talking about right now. And I think it's about, first and foremost, I think that there's a real problem in Australia around red tape and regulation. I think that we've made life very difficult for ourselves. It all came from a good place, right? Where we wanted to make sure that there was strong regulation to make sure the right houses get built at the right standard, the right quality and all the rest, right? But it's continued to get more and more bureaucratic and difficult. So that makes it very difficult for people to build properties. And I'm not even talking about big developers. I'm talking even down to like, let's call it a mum and dad property investor who owns a property that they want to split into two. And now they're basically taking one property and turning it into two and adding an extra property into the market. Things like that are difficult, right?
Yeah.
You know, we've seen some really good things around making different property types, like say granny flats, a little bit easier to build in some ways. But with every element that things have been made easier, it almost feels like for a lot of people, something else has taken its place of what's hard. And whilst that maybe isn't solving the problem of people being able to buy homes and things like that, it adds into the rental pool, and you know it has impacts in that way. So, how do we solve the problem? I think that we first and foremost we need to look at that regulation and that red tape, because at the end of the day, if people are doing the right thing, the government and the rules dictate the left and right of Arkham where we have to play. And if that is too narrow and too difficult to define, which is also another problem, it can be really hard to know what you should be doing and what you can't, and have you met all the requirements and all the rest. That's where we make life really difficult for ourselves, and that's where we make life really challenging in solving the housing crisis that, from my point of view, I don't see an end in sight right now.
Yeah, look, I don't think there is an end either, not at least in the next couple of years. Maybe if we start, you know, slowly building on those, you know, advice and red tapes and looking at doing it maybe on a federal level rather than a state by state level, that might, you know, like streamline the process. But I think that's a whole lot conversation where we can have like an all different, you know, like podcast on that. Lachlan, PIPA has released its investor sentiment survey report. You guys have been doing this for like 11 years now. The industry has been changing over all those years, but can you please, before we delve deep into the findings, give me a little bit of background on this year's report? You know, how many numbers of respondents, what was the research process like? And then we'll go into the findings.
So the investment sentiment survey, I think it's one of the most critical and important things that we as an organization, an industry body, complete and put out every year. And we use this with government when we're going to lobby government around, you know, what we're just talking about, regulations and rules and all the rest. We use survey data like this to help that. We use it in obviously media and press releases because, you know, I'm not sure that anyone is putting out such a diverse set of opinions collated into one place in the way that we are. And ultimately, it's there to try and help the industry. It's there to help everyday Australians with arming people who can make decisions with better information to make them more informed so the right decisions are made, right? Now, in terms of the survey this year, it's very interesting to see some of the results. And like you said, we'll jump into some of that shortly. But the survey itself, you know, we had almost 900 respondents to it, which is obviously quite a lot of people. I mean, if you went and put 900 people in a room, you can imagine how many people that is. And that's across, you know, people that might own one investment property. That might be people that own a significant number of investment properties. And it's very detailed. Off the top of my head, you know, we had, I think it was upwards of like maybe 70 or 80 questions in the survey. I can't
that's long,
I can't actually remember. And obviously some questions then wouldn't be asked to somebody who, you know, didn't have a response. Like if it was about, say, did you sell a property? If your answer was yes, there were other questions that flowed on from that. So it's not that everybody saw that. And but I guess my point is we ask a lot of questions because there's a lot of information to cover to make sure that we can get a fair representation. And I think that's the most important thing I want to say. While in our name, property investment, right? PIPA might be there on the investment side of the industry. We're also just real people who are volunteers who are trying to make a big part of Australian life better. And all that we want is for people who are making decisions, or the industry as a whole, to make decisions and make forward progress that's reflective of what people actually want, and not what maybe some portions of the media, because it's clickbaity, says, oh, we should do this, right? Like property investors are always villainized, right? Making sure that we're just having the right solutions to the right problems as well. Because sometimes, and I'm sure everyone listening can think of, examples of it, sometimes things that aren't problems are presented as problems. And sometimes the solutions that are put forward for either real problems or some of these more fake problems aren't actually backed by data. It's backed by conjecture. It's backed by maybe what, constituents of certain people might say they want, but it's not rooted in reality. And that's a big reason why we do this.
Yeah, you're taking it from the horse's mouth directly, basically.
Exactly right.
What's the biggest takeaway from this year's report? What do you think is, what surprised you the most?
What surprised me the most? Funnily enough, maybe it's because I obviously work in the industry as well, so I get to hear the gripes and the this and the that every day. I don't know if anything truly surprises me anymore, but I think when you actually get the data, the thing that maybe really struck home for me was around how much of an impact government reform, compliance costs, and things like land tax and the constant changing of the goalposts, how much that is actually impacting sentiment and people's decision making around what they either have done or what their intention may be to do. That really got me this year.
Well, and that's actually what got me too.
Yeah.
That's one of my questions, and it's something that also caught my attention, is the fact that policy awareness and communication around laws, regulation, tenancy change have been an issue for more than 50% of investors.
Yeah.
What does that tell you? Do you think there is a need for education on that front, or how do we manage that?
I think that the really difficult thing is that, I'll go back to what I said before. Recently, and maybe this isn't even a comment as the chair of PIPA, maybe it's just the world according to me a little bit as well, is that I think unfortunately we have a situation where governments at all levels, whether you're literally the local government, like your local council, all the way through to state, all the way through to federal, is that everyone is so focused on the next election, and 3 years is not a long time, and there's not a lot of room for mistakes to then be overcome, that populism or perceived populism becomes such a driving factor in what decisions or policies are being put forward. And coming to your question around it, I think that the biggest challenge that everyone's dealing with is this constant changing of the goalposts. And, like putting on my property investor hat, my industry professional hat, property is a long-term asset, right? You shouldn't really invest in property unless you're going for like 10 years plus, right? Now, I'm not saying that there aren't other things that can happen, or that, you couldn't be doing more niche things. But if you're just a regular mum and dad investor who's looking to invest in property for the long term, minimum 10 years from my point of view should be a time horizon. And yet in 10 years, you could have upwards of 3 or 4 federal government changes, the same at the state level, and also the same, the same at the local level. And everything seems to change every election cycle. Is it going to be about negative gearing? Is it going to be about tax? Is it going to be about land, like income tax? Is it going to be about land tax? Is it going to be about, population density changes? Is it going to be about build to rent? Like, it's just always changing. And I think people are really just starting to get sick of that.
Which is fair enough. But how do you keep up with the change? Because look, the thing is, like, yes, things are always changing, but it's the politics side of things.
Yeah.
Unfortunately, your mom and dad investors, what can they do about that? You can't really go. And look, I'm French. I would go on strike. Yeah, like my people, we would go and we would strike. But that's not something you guys do here.
Yeah.
How does your mom and dad investor keep up with all those changes?
Yeah. Well, I think at the start of the problem is the fact that we are having all of these changes, right? And I think that the way that I look at it is that we constantly see, I won't even call it backflipping, but this adjustment of perspective from each political party. And this is the thing, this isn't about a Liberal versus Labor or Greens or anything like that. All parties are guilty of this. We see a constant backflipping, and I think, unfortunately, the backflipping is not based on real information and data. Because if it was, a lot of what we see about how do we, because I'm getting off topic. The question's about how do we keep them informed, but take it to its root cause. We wouldn't need to keep people as informed if there wasn't this constant changing of everything going on, right? So I think that to start with, if we go to the root cause of the problem and not band-aiding it by things like better communication, the real solution is ensuring that all of our politicians and decision makers and industry leaders and all the rest are actually working off real information, not just conjecture. And I think, unfortunately, we sit in that position, and that's too often. And that's why the investment sentiment survey is so important, because like I would go out on a limb and say, if you went up to any federal politician, right now it's obviously Labor, and you said, like if you went up to the housing minister and said, hello, housing minister, you're looking at changing policies around housing and property investment and even bring the treasurer into it. Have you sat in a room or looked at information, raw information from 850, 900 property investors who own properties across states at varying levels of the portfolio and listen to what they have to say? And I'd be shocked if they could say yes, right?
And I guess that's where also PIPA comes into play to like represent investors.
Exactly right, and the industry, right? But I know I didn't really answer your question.
That's all right.
Like at its core, at its root cause, like I said, I think we don't want to band-aid it. We want to solve the problem. To me, that's solving the problem. But in terms of that's, maybe being a little bit idealistic about it, I think that the other side is that because so much of this is driven in the political realm, rarely do we get clear, concise communication that comes out, right? Because it gets drip-fed through, the mainstream media. Then you get a government that then suddenly backflips 3 weeks later because they realize it's a poor decision. And I think something that is really, really key and important is when you're changing things as significant as what we've seen has either been actually changed or deep conversation about changing, is being able to set up proper websites, being able to set up clear communications, being able to actually drive from a single source of truth and not, oh, is it this, is it that? Oh, should we do this, should we not? Because often that information is buried on websites that already have a ton of other information. So I think that it's about the media departments actually, just grabbing it a bit stronger,
Yeah, which is something that they should definitely develop. Now, Lachlan, you said something quite interesting beforehand. It's like when you're, going into your investment journey as a, typical moment that investors, you should go and hold your property for about 10 years plus. Yeah. Now, this year, the survey showed that nearly 17% of investors sold at least one property.
Yeah.
And they've been holding less and less their assets. What has been driving this acceleration in investors exiting the market, and what is the impact on the market itself?
Well, I'll come to my comment about the 10 years, right? And I was picking a little bit of a number, but where I was bringing this from was that when you're looking at investing in anything, right, you talk about something called the matching principle, which is that you match an asset with your time horizon, right? And the thing about property is it's quite an illiquid asset, right? You can't just wake up the next day and go, I'm going to sell my property, and then by the end of the day it's sold, right? But you look at something like the share market, it has a lot more, it's a lot more liquid, right? And you could wake up and it is sold, right? It could be sold within 20 minutes of you making that decision, right? But the value of property comes from that long-term period because you go through cycles because it is impacted by things that don't impact, say, the share market in the same way or other asset types, right? So I guess my point around that was it's about holding for the long term, right? And for a lot of people, 10 years ends up being a bit of the long term, right? But to me, the reason why we're seeing, and it comes out in the survey or the results of the survey, is that it's actually what we've been talking about for the rest, the previous part of this episode. People are finding that things like I'll read out the list, right? Federal reforms, 51.3% of respondents that said that they would be looking to sell, in the near future. 51.3% said federal reforms, right? And federal reforms could encompass negative gearing. It could encompass things like the changes to super, and it could encompass some of the other changes that have been talked about, right? 49.8% talked about compliance costs, right? We're seeing, superannuation, now needing to go and get valuations done at a much more frequent rate. We're now talking about making sure that tax is being done correctly in ways that hasn't been done previously. We're now talking about the fact that you've got land tax, which is its own category, but compliance around making sure that your valuations are coming in. Are your valuations accurate? Are you going to challenge it? So 49.8% were about compliance. And then the next biggest one, also at 49.8%, was land tax and government charges, which is, it fundamentally impacts the return of your asset. So the top three, 51.3, 49.8, 49.8, the next biggest reason is at 37.1. So there's a huge gap. And that was rental caps, right? Which potentially could go into federal or state reforms, depending on how you talk about it. And the fifth one was tenancy legislation at 32, right? If you look at all of those things, a really key part that stands out to me are these are factors that are outside of the individual investor's control, but are now being forced onto them, and they really don't have any avenue to dispute that, right? It's not like you're coming back and saying, "Oh, I got my tax notice of assessment," and you've said that one of these what do we call it? I'm having a mind blank. One of the deductions that you've put in, you're saying I'm not eligible for it, and I think I am. We're gonna have a bit of an argument about that, or I don't know, something else, something about like the property market just isn't performing the way that we want, so now we're thinking about selling because it's not there. We're talking about 5 fundamental things that are controlled by government: federal reforms, compliance, land tax / charges, rental caps and freezes, and tenancy legislation. Literally every single one of those things is government intervention.
Yeah, which says a lot.
Right? And, in Australia, I think, especially compared to other markets around the world, we've very much always had the ideals of a free market, right? And, the free market allows you to, if you make really strong decisions, you reap the benefits of that. And if you make poor decisions, you'll equally receive the negative side of that, right? But I think for a lot of investors, I think that what the survey is telling us is that their right to choose, their right to autonomy over their investment decisions is being further and further restricted. And yet these people are typically mums and dads, and they are the biggest providers of accommodation into the housing pipeline, far more than government. And I think, especially that we see from some of the other stats, maybe there's a bit of a feeling out there now of, we're doing a lot and we're just consistently having that stripped away from us. Why are we even bothering to do this? You know?
And look, the thing is, like, the survey showed that out of all the property that have been sold, not everything is going back into the rental pool.
No.
So you've got about 40%, 42% of properties that stays in the rental market.
Yeah.
37% that goes to PPOR and 25% that goes for first home buyers.
Yeah.
Out of all of these ones, the one that keep holding their properties, they do not increase the rental that much. How's the rental market going to go around all of this, yeah?
Well, and that's the thing that people, there's often an argument that people go, oh, well, if it's sold and it's bought by a home buyer, well, that's the right solution. But people forget that one of our biggest drivers of population growth comes from overseas migration, right? And that's a part of any country, right? And this is certainly not, I don't think that this is a conversation that's about let's close our borders and stop that, because we as a country cannot grow and develop without having migration, right? We need it. We need ideals. We need investment. We need, we need the diversity that comes. Like, how could you have your local Chinese or Thai food if there wasn't immigration to help support the fact that culture came out here and that we were exposed to that food, right? And it continued, like, that's a very basic example, but right? And you yourself,
I'm an
right?
immigrant.
I knew you were going to say that, right?
And look, I just want to point that here, like, as an immigrant, you are not allowed to buy in Australia unless you are a permanent resident.
Yep.
It took me 10 years to become a permanent resident. So I had 10 years of rental behind me before being able to buy that property. So yes.
And here's my question, right? Let's say that when you did move out here, because I think this is fair, like in the context of this conversation, sitting with somebody who is an immigrant themselves and who speaks a lot of languages and is obviously very culturally diverse, you're literally a person who is firsthand impacted by this. When you came out, let's say even if you could afford to buy a property, right? I'm not saying the best, but I'm not saying we're going out to the eastern suburbs of Sydney and buying a $10 million house, right? But I'm saying you could have come out and you could have bought a house that was maybe $600,000 or $700,000, and let's say there was no restrictions, right?
Yeah.
Tell me if I'm wrong, but I would make the assumption that you probably wouldn't have done that because you've moved out, you have no idea what it's like to live in the country, you have no idea what it's like to live in certain parts of the country, and your first thought was probably, I want to live a few places, see where I want to live, I want to learn about, what's going on, and maybe then I would consider buying a property.
Yeah, look.
Would you say that's fair?
That's really fair. Also, I was 21, yeah?
Yeah.
So I came, my plan was to learn English at first, and I finished my studies here.
Yeah.
So, contributing to the society first,
Yeah.
Also the job that I had back in the day would not allow me to actually buy something. So in any case, and a lot of people are and were in my situation, they're still in my situation, a lot of students. So you contribute to society, but you're not in a position to buy. And when you are in a position to buy is usually maybe about 5-6 years after you first move into the country, because you feel more confident. English is better also, because buying a property when it's not your first language, it's quite tough. It actually adds to the difficulties of things, because you need to understand all the legal things around it. And how many times did I have to Google a term just to make sure I understood correctly what I mean? And I work in property, you know.
Yeah, and I know how smart you are. I know you speak so many languages, but I think because there's a point I want to come back to, but as a separate note, right, it goes to the regulation and rules and changes as well, that if we make things complicated, and I think, for example, the fact that almost all states have now moved towards templated contracts where it's put out by the real estate institutes and it makes it more streamlined and easier, I think is a fantastic thing, right?
It's easier, yeah.
Right? It's easier, right? But where I was going to go with my point was that people who say, okay, well, if it's sold to somebody who's buying a home, that's obviously a great thing. What you're forgetting is that the growth of population in Australia is not just made up by people like that. And when we need to make sure that the rental pool is healthy, and not everyone can afford to do it, as in to buy a home, and also people legally can't do it if you're an immigrant or you're traveling, or maybe you were born here, you're raised here, you moved overseas and you come back and now you just don't want to buy because you want to work out where you want to live. There's a million reasons, but that's why the rental supply is so critical and why we have such a shortage, because policies and it's not just policy. I've talked a lot about government, but it's even down to, lack of availability of trades to do it. Lack of materials or expensive materials and the cost that's come with that. There's a smorgasbord of reasons, but simply going, for a lot of people that simply go, if it's sold to a home buyer, problem solved. It's not the case, and it's a very reductive, simplistic view, because not only is it wrong, but it's also trying to simplify a problem incorrectly.
Yeah, I think you need a little bit of both. I think it's good that people can finally buy their first property or buy as a PPR, but you definitely do need a healthy rental market. Otherwise, even the rental prices, they're just going to go up and go up and go up.
Yeah.
And that's not, landlord's fault. It's just that their cost is going up also.
You know what was a really interesting stat? And I got my notes here because there's so many stats that came out of the survey. This is something that I think is really interesting to see, right? There's always property investors being villainized, right? Oh, the rents are going up. There's this, there's that. Oh, poor tenants and all the rest. And the reality on the ground just does not reflect that, right? Like I've said a number of times, most property investors are mum and dads, right? If you get the ATO stats, 91% of property investors only own up to 2 properties, right? It's about 71% owns 1, and then a further 19% own 2, right? They're not the villains that is often made out by people who are obviously have an agenda, right? But coming to what you're talking about in terms of, or the comment you made around, landlords then have to increase rents or things like that because it's competitive. Something that I thought was extremely interesting coming out of the survey was looking at operational cost increases of a property, i.e. all the regulatory changes, tax changes, and then also just inflation that comes out of it as well, versus how much was passed on. So 39% of people saw costs rise between 11 and 20%. 21% saw costs rise between 21 and 41%, right? So out of that, we're saying that 60% of people saw costs go up by between 11 and 41%, right? Despite this, 65% of property investors passed on less than 10% of that cost, right? Less than 10% passed on. Even though you'd say that you go, I mean, think of a coffee shop right now, right? Coffee, you could go and buy a coffee not that long ago, and you could buy, your medium to large coffee, and it might cost you $3.50, maybe $4.
I missed that time.
Right? Now, you go buy a large coffee for $7 or $8, right?
Yeah, if you find $6, you're pretty lucky.
Right? And that's not me saying that cafe owners are passing on 100% of their costs. I'm not saying that whatsoever. But you go and look at cafes, for a cafe owner, for example, they almost have no choice but to pass on a vast majority of their costs because it's become so much harder to run a business, right? A very different topic to what we're talking about today, but it has. It's become a lot harder. Again, regulatory changes, costs, inflation, all the rest, right? But you go look at the cost of a cup of coffee. It has gone up by a rate probably a lot more aligned with the increased costs that are associated with that. Property investors are passing on. The vast majority of them are passing on less than 10% of that cost increase to their tenants. And yet so many different, stakeholders, with big ones being government and mainstream media for clicks, want to villainize and demonize property investors when the odds are is the reporter who wrote it, their parents are probably property investors who probably only own one property, and it's probably a large factor and linchpin in their own retirement. And yet that reporter would say, "Oh no, my parents, they're a good landlord. They keep the cost low, they do all that." And yet in the next breath, with the sweep of their pen, they'll be talking about how everyone is a bad actor.
That's
not to throw jabs at not SPI, of course.
No, but look, I get it, and I think I think you do need landlords. I think landlords are in their right to increase a little bit their cost if their costs also are increasing. But I think the fact that they're not passing on their full cost, I think it's really remarkable.
Yeah.
And I'm wondering if it's also due to a little bit of negative gearing where they could claim it back afterwards. Now, Australia isn't a linear country, yeah? So not all the states and cities are equal. Lachlan, give us a rundown of where did investors sell the most?
Yeah, very, very interesting. It's very interesting to see that overall, there is a lot more sales that are now starting to go on, right? And as I said, like the reasons exist, the reasons I've already covered of why that's happening. But, interestingly as well, though, the list that I went through prior, that was around the top future risks prompting sales, right? The current reasons why people are looking at selling is reducing debt exposure, which I think goes to, there's been higher costs, right? Rising holding and compliance costs and increased land tax and government charges, right? So there's still some very big similarities between the future intention to sell versus the current intention. But what we've seen from a location point of view is that Queensland has been leading the charge with the percentage of investors selling, right? We're up around 35.5%. I would say that's probably, to me, I see that and I go, that makes a lot of sense because Queensland's also been the recipient of a lot of investing over the last few years. But that has gone up since last year, right? We're up from about 33.5 to about 35.5, right? Victoria, pretty similar, 30% this year versus 31 last year. So very, very similar. And that corresponds with, where people may be seeing prospects, which I'm sure we'll talk about shortly. New South Wales, very interesting, right? Last year, 25.4%. This year, 11.8%.
So it dropped.
It dropped by quite a chunk. And I think that's maybe reflective of the fact that I think a lot of New South Wales locations over the last 12 months haven't probably had as much attention of people going into it. And now maybe it's a case of, and I can think, from the stuff I do with Atlas, I can think of maybe some markets there that are starting to present themselves a little bit in a more attractive light. So maybe that helps explain that. But I'm just having a look through the list of what else is probably quite interesting. Brisbane as a city, up from 16% last year to almost 20% this year.
Okay,
right?
Pretty big.
Right. But if you go and look at the cost in Brisbane, it is huge. You go out to Ipswich, where it's historic, similar to Western Sydney and in Sydney. Always seen as a little bit lower socioeconomic, a little bit more affordable, obviously a little bit further away from the city. There's some environmental concerns that come up there in terms of flooding with proximity to the river and things like that. But it's always been seen as an attractive investment location. You're hard-pressed to find a property under 700,000 now, right? Whereas, you go back 2 or 3 years ago and you could buy with a 4, 4 or 5. So I think a lot of people are probably cashing in. And when you combine these reasons for selling around, an increase in their lack of autonomy, increase in costs from government and compliance and all the rest, to me, it makes sense what we're seeing in that respect. And there's obviously some other ones there, but, I think that overall, I think that it's quite reflective of probably where people have been buying. And now that autonomy is maybe being infringed upon or impinged on a little bit, maybe they're looking to take some gains off the table.
Yeah, and which, look, I think in Queensland, it does make a lot of sense to sell your property. If you've been holding for a couple of years, it's been growing, got your capital gain, just time to move on to a next market if you want to. Now, that's something that's quite interesting for us too, is like, despite that many investors have been selling their property, nearly 60% of investors think that now it's a good time to invest.
Yeah.
Where are they going? What's coming ahead? What's the next hotspot?
Yeah. Well, look, and I really want to balance out a lot of the things I've said, because obviously I'm sure everyone can hear I'm very passionate about it. I think there's a lot that property investors offer into society and the economy. And I think that sometimes it's not appreciated in the way that it could be. And I understand, right? In Australia, we're very big around tall poppy and property investment. It's seen as somebody succeeding and all the rest. Look, I completely understand that. But ultimately, 16% of property investors sold a property, at least one property in the last year, right? If we flip that, right, the other side is that, you're at over 83% didn't, right? So it's not that property investing is going down. It's not that property investing is suddenly not a smart way to build your wealth. I think it's just really important when we see these survey results to look to see the fact that we are seeing increases. Like last year it was 14.1 and this year it was 16.7, right? It's important to see this because we can head off issues before they really become issues, right? But coming to the more positive side, as you mentioned, 60% do still believe it's a really good time. Last year it was 63. This year we're at 60. So you can see slight uptick in people selling, slight downtick in people maybe being as optimistic. But ultimately, it is still very high. It's still people are very optimistic. And I'm sure not a lot of people will be surprised to hear it, but Melbourne is really the front runner and the leader from people in terms of where they see potential coming from, right? So last year, 26.3% of people saw Melbourne as a smart place to be investing. This year, we're up to 41%, right? To over 2 in every 5 property investors believe that Melbourne is now the place to be going to. And it makes sense, right? Values have been depressed. Performance hasn't been there. The Victorian government just seems to want to be doing everything possible to make it unattractive to invest in. And yet we're now in the position where affordability and pricing relative to other markets, that is coming up higher than all the changes and sort of the demonizing that the Victorian government has been doing towards property investors with all the changes, land tax, tenancy change, all the rest. People are now having to go, you know what, we just have to look past that because it's an affordable market relative to Sydney, even relative to Brisbane, right? Yeah. Brisbane, very steady, all right, about 16.5%. And again, it doesn't surprise me, right? You have people always love Queensland, warmer climate. It's a place that a lot of people move to, a bit more space. The size of properties, land as well as the property size themselves are a bit bigger than maybe say Sydney or even Melbourne. So Brisbane, always an attractive place to invest and always, somewhere that's, has value to be gained, right?
And the Olympics are coming on the
And
top
the
of
Olympics, of course, we can't forget the Olympics.
Can't forget about the Olympics.
And you know what? Maybe something like that is really having a benefit to offset the strong performance that Brisbane has had with the fact that people can have an outlook of, at the end of the day, it's still, 6 years away? It's 2032?
Yeah,
2032. And we're 2020 or 2025. So it's 7 years, almost 6 years. It's still a long time away, right? But people can see, what's coming, So we have that. And then, when we move to the regionals, Queensland, still very, very strong at around 8%, and New South Wales at 5.5%, right? Ultimately, capitals are always going to take people's interest. But as we've seen, the regionals have often, especially over the last few years, outperformed because there's so much investment going into the regionals all across Australia. Accessibility has never been higher between airports, the airlines, and obviously flying to those airports, not just your little aerodrome club airports. Investment by government and investment by private enterprise into education, transport links and infrastructure, healthcare, retail as well, and then obviously just whatever is attractive about that area. It could be tourism, all the rest. So the regionals still remain very high with the interest levels for a lot of people because we've always been guilty of being very capital city focused, but now I think we're seeing from survey results and just what I see in the industry is that people understand, well, I could go and live an hour and a half out. I could do the same job because I could maybe work remote, or I could commute. I could do a day in the office and then drive an hour home, and then I'll work at home for the next 3 days, and then I'll do the last day in the office, and I've got the weekend, and then Monday back. There's so much opportunity there. So very interesting to see where sentiment is looking at investable markets.
Very interesting indeed. Lachlan, last questions for me.
Yes.
So we've got a pool of first-home buyers coming up October 1st with the 5% scheme. We've got maybe another rate cut on the horizon. What's coming ahead for the end of the years on the property market and going into that first couple of months of 2026?
Yeah, it's a great question. I think that compared to the end of year run we've had for the last few years, I think that people are very optimistic, right? And I know the survey said technically we've come down about 3%, but I think people are a lot more optimistic. You go back last year, we thought rates were going to be coming down, and they didn't. It was a bit of a false start with some of the economic data, right? You go back a year prior, and we're seeing things like government tax changes, regulatory changes, as well as over those years prior, the increase of interest rates, right? But now we're in such a far more positive environment, right? I think the weather's already turning. People are getting excited about that.
Yeah.
Right? We've got rates have been coming down, and whether or not it happens, we know that there's still probably a little bit left in the tank to be taken out of. Whether that happens this year or next year, I won't hypothesize, but people know it's there, and it drives sentiment, right? It's optimism, right? And then we've got things like the first home buyer changes, where at its core, no matter whether or not you're going to be involved in that group of people that are now eligible, it doesn't matter, because at its core, there's now more people who are eligible and have the ability to buy property, or there will be, right, very shortly, than there was before. And that means demand is going to go up. And as we've been talking about, and as everyone knows, supply isn't. Supply really is not. So basic economics tells us that it's going to have an impact, right? So I think that what we're looking forward to towards the end of the year, and I guess my advice to everyone is, if you are looking at getting into the property market, now, start to make your moves, right? It doesn't happen overnight. You need to look at how you get your borrowing sorted out. Are your tax returns done? Have you got your savings there? Where are you going to, are you going to use a professional, right, of any variety? Are you using a buyer's agent? Are you using a mortgage broker? There's a lot of moving parts, and you got to live life day to day between now and then as well. So the optimism is amazing, but for anyone listening, don't let that optimism stay as optimism. Turn it into action.
Yeah. Look, I always say this: if you need the little nudge, I'll give you the little nudge, but don't go and buy because you've got FOMO.
Yeah.
Well, that's all we've got time for today. Thank you so much, Lachlan. chair of PIPA.
Yes.
To have joined us today on that special crossover episode between the Smart Property Investment Show and the Real Estate Business Podcast. Thank you.
Thank you for having me. And if I could just give one final shout out.
Of course.
Please, whether, if you're an industry professional and you haven't joined PIPA, please come and do so. Very, very small membership cost, but part of a very, very large membership-based organization. We have it, and then we have things like our conferences, our awards nights, breakfast, seminars, other networking occasions where you can be around other professionals and elevate your own professionalism and your own skills by being a part of something that's that little bit bigger than yourself. And if you are a member listening in, please make sure that you've gone and bought your tickets to the national conference happening in Sydney in the back half of October. We've got amazing speakers lined up, and it's going to be absolutely fantastic for professional development and learning and seeing where the property industry is at today.
Fantastic. Thank you so much for joining us once again, Lachlan Vidler, chair of PIPA. In the meantime, we'll be back very, very soon with another episodes. Bye for now.